Okay, let's get more in finance now. We're joined in Sydney by Tony Boyadjian, Senior Vice President for Foreign Exchange at Compass Markets. Tony, good morning to you. Now, US economic growth, according to analysts, is expected to rise, which I suppose is good news for the global economy.
Good morning, Michael. Yes, it is. They're expecting US economic growth this year to lift from 2.5% to 3%. It's on the back of the corporate tax cuts we saw implemented at the end of last year. And when you add to that the big government spending that's been approved now in the US to the tune of $300 billion over the next 2 years, it's quite inflationary. Overnight, the US Federal Reserve minutes indicated that they're going to raise interest rates gradually. So we're looking at 3 to 4 interest rate rises in the US this year, which is keeping the US dollar fairly well supported as well.
Okay, and back home there's continuing discussion about when most Australians are likely to see a wage increase, and there's been, I guess, some further pointers on that front, Tony.
Indeed, Michael. Look, yesterday we saw the fourth quarter wage price index figures come out. They're a little bit better than expected, but still quite weak. Annually we're looking at wages growth around 2.1%. It's still quite low, near those record lows. And it seems that the Reserve Bank is concerned about that. They think wages growth will be slow and protracted in Australia. There's this huge problem, even though we've got quite a strong jobs market, we have an underemployment problem. In other words, the number of people with a job but seeking more hours, and as a result people are taking home less pay, and wages growth are remaining quite subdued. So the Reserve Bank wants to see wages growth and inflation pick up before they can entertain the idea of raising interest rates again. It's keeping the Australian dollar at the lower side of the ledger, and where we expect the Australian dollar to filter lower during the course of the year.
Okay, it'd be a big dilemma for the Reserve Bank, won't it, Tony, if it feels needs to, compelled to increase interest rates at some stage this year. It knows the ability of lots of heavily indebted Australian households to service what will be higher mortgages is fairly limited if there are no subsequent wage rises.
Absolutely, Michael, that's spot on. And the Reserve Bank is concerned about the high levels of household debt. That's the reason why they don't want to raise interest rates at this moment in time. Unless there's a big pickup in wages growth and inflation, that won't be happening this year, and that's probably going to keep the Australian dollar weak as well. Our end of year forecast for the Australian dollar is for it to fall back down towards that 73 US cent level.
Okay, we'll see where it lands. Tony Boyadjian from Compass Markets, thank you very much for your analysis.
Pleasure. Thanks, Michael.